That's who I am, Panos Chalkias, CEO of Transaction Systems out of Hungary. Now, for those of you who don't know who we are a Budapest-based company distributing payment terminals, payment software, and related solutions across all Central, South, and East Europe, and currently expanding both to the West and to the North. We're quite experienced in the POS field. We have more than 700,000 devices on the field already. And we offer the full cycle of hardware, software, and services around the physical payments. I was wondering what exactly I want to talk about today. Because we get into conferences and we always talk about exciting new things that will disrupt the market in the future, etc. I took another step today. I believe it's good to share some views on some topics that more or less we are discussing among us these days in the payments world, and see what do we think about that. What is our view of the future, short term and long term? Now, I believe that in this industry for the last few years, we are going through an identity crisis. What I mean by that is that 10 or more years ago, we had the banks who were also acquirers, we had the vendors providing terminals, and the schemes providing transaction processing, clearing, and that's it. Then something happened, and everybody started to have an intention to become somebody else. So we saw acquirers who want to be a PSP provider, adding value-added services to their portfolio. We saw vendors like us who tried to become acquirers. We saw tech companies who tried to become payment institutions or neobanks or whatever. It seems that nobody is exactly comfortable with what they're doing today, and they want to do something different tomorrow. And why is that? There's a very simple reason, if you ask me. It's because if you look at the entire fintech environment, payments is still the biggest portion of what we call financial technology. I mean, yes, there is digital banking, there is crypto, there is buy now, pay later, but the total value of these markets compared to the total value of the payments market is insignificant, or almost. So everybody wants a piece of the slice, a slice of the pie of payments, and that's what's driving everybody to try and become something else. And I mean, you all know examples. I don't need to mention examples here. Why is this important? Because this change in the traditional roles of every participant in the industry created a cycle of complete revision of partnerships and traditional business models. What I described like the status 10 years ago is no longer there. The separation between acquirer, PSPs, banks, vendors, fintechs, etc., it's not clear anymore. And this is not a bad thing. I'm not saying this is like a bad thing, but it's a new reality. And talking about the role of banks and acquirers, in most European markets, banks have stepped out of the payments market in the last years in two ways, either by selling the entire business to cross-border acquirers, like in my home country in Greece, every bank sold their payment business to Nexi, Euronet, Worldline, etc., or by selling out everything else and keeping just the pure acquiring. So in most of the countries, it seems that banks are getting out of the payment market. However, we are now in Baltics, which is the opposite. I understand that in these markets, the banks still have a very strong hand on the payments market. So this is not a general trend, but many of the European countries, the banks somehow reviewed or reconsidered their role in the payments ecosystem. On the other hand, the large acquirers are facing challenges of new types of competition. Neobanks, fintechs, or device vendors like us who step into PSP and acquiring offerings. So let's say 10 years ago, it was very clear who are my partners and who are my competitors. Today, it's not so clear anymore. And all of that is happening while, in theory, the schemes are preparing for the next day in which the schemes want to offer direct acquiring services therefore theoretically eliminating the role of the acquirers or the PSPs as we know it today. Of course, this is a plan that has been around for a long time. We have discussed it in so many conferences, but in theory, it's still there. And I was very interested in the previous presentation where the exact opposite has been discussed, how to use the banks to process money and make transactions within Europe bypassing the schemes. So this is all a very challenging mix. Another topic we are talking about a lot when it comes to physical payments or payments in general is the soft POS versus EMV discussion. I'm guessing everybody in this room at some point has been sitting at a table discussing this topic with some colleagues or people from the industry. For me, it's very simple. It's a theoretical dilemma. It's not a real dilemma. It's not a real question. The only reason that we are talking today soft POS versus EMV terminals or soft POS devices versus EMV devices is because for some unknown reason, the schemes have mandated that the EMV devices, the Android EMV devices we are selling today, cannot be managed like real Android devices. So we cannot update the operating system to a newer version. We cannot connect them to Google Play. They cannot run GMS services. Nobody has ever given me a convincing answer why this is the case. But exactly because the schemes have mandated this, this led to the development of a whole new segment in the market with simple devices, tablets or similar devices, with a payment software, SoftPOS, becoming sort of a payment terminal. So all of this discussion has been generated by that. And all of this discussion will hopefully be terminated when in the near future or not so near future, the schemes under the next generation of regulations will allow the obvious, that an Android device, which is a payment terminal, can connect to Google Play, do GMS services, and update the operating system. What is true is that the market needs a payment device. The merchant or the average cardholder doesn't care if this device has what version of Android, if it is SoftPOS or EMV or PCI or whatever. People are used to pay with their card at the payment device. And that's it. Nothing more. The whole rest of this discussion is for us. However, there's a challenge here because the introduction of SoftPOS, okay, when the industry started with SoftPOS, the theory was you're going to put a piece of software on your mobile phone and you will accept transactions. Well, we all knew this is not going to work because I will never go to Tesco and tap my card on the mobile phone of the checkout clerk. Yeah? But this has led now to everybody who is making an Android device of any type in this planet, theoretically today can download a piece of software and make this device a payment device, which is kind of a surprise. Because 5 years ago in this industry, we were fighting on whether it is safe that an Android payment terminal would send geolocation data to a geolocation server. And 5 years later, we basically say as an industry, okay, take any Android device, put some software on that, and accept payments. It's kind of scary on one side. In real-world experience, however, the development of Android devices becoming payment devices by software only has faced a lot of compatibility issues, integration issues, CVM variables, lifecycle management issues, support bandwidth of the people providing. So it's not that simple. However, as an industry, what I believe is that for the next few years, we will have to learn to live with both worlds in parallel until the regulatory side of our business decides to resolve this question once and for all. Part of the same concept is the all-in-one challenge. You hear it more and more, a common topic across almost all Europe, the bundling of ECR functionality, payment functionality, and fiscal functions in one piece of hardware or in one device. And there are two ways to do that. Again, two parallel thoughts, two parallel ideas in our market. One way is to say, okay, take an ECR device and put some software on that to make it a payment device as well, and put the fiscal as well. Or take a payment device, which is by definition a secure device, and put ECR functionality and fiscal functionality on the payment device. And this is another dilemma on which we spend a big part of our working days discussing with people in the market. What I believe is more important here is that this is a first step in the process of moving from the POS, point of sale as we knew it, to what we call the point of interaction. What is a point of interaction? It's a device that allows customers to perform payments, but also perform a lot more on the same device. And the graphic here is just an indication of how this evolution looks in terms of real-world hardware. So what is a POI? It's a device that can do multiple transactions, from payment to ordering to loyalty to fiscal, etc. The device can have multiple form factors. It can look like a traditional POS terminal, or can be a kiosk, can be a cash register. It needs a very advanced back office platform, so you can manage all of these components. It allows customer engagement with second screens, with interaction between the device and consumer devices. It allows interaction between the acquirer and the merchant, which today usually is by picking up a telephone. It is adjusted to the merchant needs in terms of form factor, cost, and interface to other devices he is using, and is addressing all types of payments: EMV, PCI, soft POS, wallets, P2P instant, QR payments. You can no longer afford to have multiple devices on the merchant countertop. And all of this is facilitated by the Android revolution. I'm very proud. Our company was the ones who sold the first Android POS terminal in Europe in December of 2016, back when nobody believed that Android would grow so rapidly in the market. But Android operating system has taken the market by storm. It's the biggest change over the last 10 years because they are multi-app by default, they are open to integrations, they are easier to use, easier to manage remotely. And in fact, with a proper Android device, I bet that most merchants can run everything that they need on their daily business on one single piece of hardware. So we believe that at the end, all you need on a countertop is a POS terminal which can serve all your needs. And this terminal doesn't have to be really a terminal. It can be a cash register, it can be a kiosk, it can be a PDA, it can be a payphone, a pay tablet, or a signature pad. So we're talking about hardware that is basically a payment hardware plus several other features adjusted to each individual merchant. And this is what our offering is: a very extended range of hardware together with their software from the leading POS vendor globally, where your merchants, your customers, can choose between more than 60 different device models and between 60 different form factors and 60 different price levels. And all of these devices will be running the same application, the same payment software, with the same kernel, so you just certify once, and you can, for each one of your customers, you can pick and choose what is the right hardware combination. And all of that is powered by Maxtor, which is the industry-leading terminal management system for Androids, plus application marketplace for retailers. So this is what we do and how I think this relates to the current conditions in the market. I believe that, and it's interesting that we have this conference here, I see that in Baltics, Android, let's say, adoption in the payments market is not so high as in other European countries. In my home country, in Greece, last year, the total market for POS terminals was around 130,000 euros, 130,000 pieces, 130,000 terminals were sold. All of them were Android, all of them. So I believe that this is something that will be coming to the Baltics real soon, and we hope to be a big part of this change. Thank you very much.